Hello, agentpreneurs, and welcome to today's episode of the Daily List Report. As always, I'm your host, Randy Shiozaki. I'm also one of the founders of ListReports. If you want to learn more about ListReports and our free products for agents, 300,000 of you use our products. There's a link below in the description. Also, as we've been talking about, we've got a great month of fun contests and prizes. There's a link below to enter. We gave away a bunch of free coffees last Friday. We've got more prizes coming up this weekend, so make sure you check that out. We've got a great episode today. We've got Willie Mandrell on. Willie is a real estate investor. It's not an angle that we cover typically on this show, but it's fascinating because I know a lot of you out there are real estate investors yourselves. Pull up a couple biographical sort of links and information on Willie. His website is mandrellco.com. Again, link below. You can learn all about Willie and his company. Also got his Instagram here at WJ Mandrell. He's got a bunch of great content on his Instagram, so make sure you follow him and check that out. And then, like myself, he's also an active YouTuber, and he's got some great videos up. You should check out all about investing in homes, how to build wealth using home equity lines of credit, things like that. So definitely check out all of the information that Willie has to offer. He's a self-made man. He's a multi-millionaire real estate investor, broker, coach, lecturer, author. Recently wrote a book called The Cash Flow Secrets. Been involved in well over a couple $100 million in real estate sales, and is the owner of the Mandrell Company, and he's based in Boston, Massachusetts. But I won't spoil all of these great things. I'll let him introduce himself. So without further ado, welcome to the show, Willie.
I appreciate you having me on.
Absolutely. Thanks for doing this. So, Willie, I always give my guests an opportunity to spend a couple minutes and introduce themselves. So why don't you take a moment here and tell all of our agentpreneurs out there who Willie is?
Sure. I'm a real estate investor first and foremost. Been in the real estate business, or at least the investing side, since 2006. Right before the market crashed, 2007, housing market crash, 2008. Bought my first multifamily in 2006. Kind of rode the market down, and then opportunities came in 2010, 11, 12, 14. Bought some great properties. Rode that wave all the way back up, and here we are in 2020. I own about 40 units in the Boston area, maybe another 20 in various stages of construction or under contract. And the way things are going, we might be looking at 100 units by the end of 2021. So like I said, love to give back. I'm the type of person this is a great business. It can have its complexities, but I don't think that it's a really complex business. My grandmother was in this business, and she, kind of built a substantial portfolio for herself as well. And I think this is something that anybody can do. So part of the book, Cash Flow Secrets, this is all about those little small things, those little small mindset shifts, just managing your finances and little things that were never taught to me in high school or college, that people can use to take real estate and use it as a tool to retire early and build financial freedom.
Absolutely. No, I think that's great. I think everybody watching probably knows this, and you certainly do, but real estate is the greatest creator of wealth in this country, right? And if you look at the data on homeowners, even if they're not investors versus renters, 90%, right, higher. Actually, it's more than 90% higher. Massive, massive increase in net worth because this becomes a primary asset. And I think part of your book talks about how you can leverage that asset, right,
Right.
for investing in other properties. So, Willie, let's take a step back for a second, right? Because you obviously have family. You said your grandmother owned properties, like so. You were exposed to this business early on. How did you get into it? In other words, I guess my question is, where did you start, right? Like, how did you buy your first property? Like, what was that experience like? What made you decide to go down this path?
Yeah, and that's a good question. I mean, the first property was FHA, an FHA loan, Federal Housing Administration, I believe is the acronym, and that just allows you to get in, allows homeowners to get in for a 3.5% down payment, and I believe that's across the country, no matter where you are. FHA applies, and it's a low down payment owner occupied program, meaning you intend to live there. So I encourage all of my clients and anybody that I'm coaching or mentoring, if you're going out and making that first purchase, make it a multifamily. I know when my wife and I were talking early on, she was like, I really don't want to live multifamily. I really don't want anybody above my head. That's the way we grew up. We both grew up in multifamilies. She wanted a single family in the burbs, but I understood that, and kind of nudged her to say, if we go buy this multifamily first, we can leave a year or 2 years later down the road and then have that and keep that building as a rental property for ourselves.
Yeah.
The key that most people don't understand is you can now take, let's say we bought I bought my first two family. And then I encouraged her to go out and buy a three family, also with a FHA low down payment loan. And then we can both move out of those two and three respectively and move into a single family together, which we also purchased with a very low down payment owner occupied loan. That's one of the things that the mortgage brokers will never tell you, or one of those secrets that the mortgage brokers will never tell you, but that banks look at multifamily as a less desirable situation than a single family. Single family is the ideal. So if you start off on multifamily, you can usually trade up in their eyes with also a low down owner occupied loan. If you buy the single family first, it is now you're trying to become an investor. We're going to need 20%. I just understood a book early on. I think it was 101, mortgage secrets, or something that the mortgage brokers will never tell you. And I can kind of give you the link to that as well. And it kind of opened my mind up. I learned about how banks think and how mortgage brokers react. And I understood that my path was easiest if I bought multifamily first and then went into the white picket fence,
Yeah.
American dream life. Yeah.
That's really interesting. You know, what's funny about that, Willie, is, I was raised by a single mom, and the first place that I grew up in that she bought, I don't know if it was FHA or not, it's a long time ago, but it was a duplex. And we lived in the back, and we had renters in the front, and it helped her pay the bills, and it turned out to be a good investment, and she was able to parlay that into something else later, right? Didn't turn into a big portfolio of homes for her, but, it made sense. Like everything you're saying makes sense. So, is this one of those things, Willie, where you kind of start in one place and then you continue to sort of parlay that into the next thing? You take your increased equity or ownership or whatever, and you sort of roll that and you build that portfolio over time. Was that your strategy?
That's exactly it. And it didn't start off that way. I think initially, I bought my first home when I was 23. So initially it didn't start off that way. It was more or less me taking the advice of my grandmother and basically saying, "Don't go buy a condo." I knew home ownership was important. I went to school for finance, so I understood the way money worked from a more of a corporate standpoint. But I've read Rich Dad Poor Dad. I read some of the Millionaire Real Estate Investor Gary Keller and understood how real estate worked, but wasn't a true believer until she said, "Go buy that first multifamily." And I'm glad I did. I started collecting rent. Somebody else is paying down my mortgage.
Yes.
For a very short time, the house was appreciating. Before that market crashed,
Mm-hmm.
but it made sense to me. And then I think one of the gifts that I was given outside of the encouragement from my grandmother was actually that recession that happened in 2007, 2008,
Hmm.
2009, 2010, very early in my career. I was in my early 20s, but I was given that gift because I took that and I said, well, if I'm able to survive this, there's going to be some opportunities on the other side. And I learned how to, ride that market down and stay mentally strong. And through all the people that were getting foreclosed on and losing their homes, I was still making 65% of my mortgage payment via someone else.
Mm-hmm.
Someone else's rental income coming in. So when I saw that, I was like, even during downturns, I can still be successful in this business. And during downturns, I also provide opportunities. So
Mm-hmm.
I took the advice of Warren Buffett, and I said, when people are running left, you look right and you look for
Mm-hmm.
opportunities.
Yeah.
And that's what I did in 2010, 11, 12. We made some of our best investments in 2012. I believe that was probably, in hindsight, the bottom of the market. And we bought one property in 2012 for roughly 400,000, and the thing's worth 900 today.
Wow.
So I mean, to answer your question, yes, those opportunities allowed us to go in and tap into some of that equity, pull some of that equity out, and then go on and make other purchases. The rents as well. As the market changes and supply and demand and the economics, especially here in Boston, very desirable place to live. We have
Mm-hmm.
Harvard, MIT, and some of the colleges and universities pushing those rents up. The rents went from 2012 $1,500 for a three bedroom to nearly $3,000 today.
Wow.
So even though I was pulling money out, the increased rents would support the increased debt. So I'm
Hmm.
basically pulling out $200,000 now and going and using that as a down payment for another piece of property, and then it just kind of snowballs. Once you have three or four or five or 10 properties, and they're all appreciating at a 5% rate every year,
Hmm.
it gets kind of ridiculous, and, in a good way. And I mean, it just the wealth just starts to snowball after that.
Oh, that's really interesting. That makes perfect sense. You know, Willie, I think the big question I have, right, and I'm sure a lot of people who are watching right now, is if you look at the market today, right now, we are breaking records every year, right? Prices are higher than ever. Inventory is super low. Rates are low, which is great, which is fueling that. Somebody watching right now who wants to get into this game it feels like it's tough right now. It feels like it's tough to cash flow a property right now if that's the goal. How do you think about the market today and the opportunities that exist for investment properties?
Yeah, no, absolutely. I mean, I'm still buying. I'm an active investor right now, and I think the way if you're new to this business or you're kind of you feel like you're in a little bit of a slump, I think the way that you need to think about the market always is there's going to be points where deals and opportunities are a little bit more difficult to come by, and money is very easy to come by, and that may be where we are today. There's going to be other opportunities, other markets or other places in the cycle where deals are very easy to come by, but money is going to be a little bit more difficult. So in my database, I constantly have this seesaw where I'm filling up the database with more and more agents, more and more wholesalers, more and more other investors, other developers who are out there, and I want to actively connect with them and make sure that I'm seeing every deal that comes through. Those are the times where money is easy and deals are a little bit more harder to come by. The inverse relationship is going to happen at some point, as well, where money tightens up and you have to go out, and now the bank that you've been using, and this has happened to me just recently, said we're no longer lending. We've been bought out by another institution, or the market that you're investing in, we know we're no longer interested in putting any money there. So now you have to go fill up your database with more and more lenders. So when you get that deal, I'm now sending it out to four or five or six lenders to look at the same exact deal that I was only sending to one, prior. So it can be, and that's the balance. That's the seesaw of this business. There's going to be you're never really going to have this balanced opportunity where you have a plethora of deals and then just money is just,
Hmm.
falling into your lap as well. That's
Right.
it.
Unfortunately.
Yeah, it wouldn't be investing at that point. It would just be kind of, something that everybody would do. So the way that you weed yourself out, the way that you make money in this business, is sometimes it's going to be more difficult, and you have to kind of balance that out, and make sure that you're keeping your database filled with not only lenders and potential partners. That's also the other thing that I keep on the lending side is potential equity partners and potential private money partners as well. People who are may not have the resources or access to deals like I do, but have a little bit of capital, and they want to get it out of the market or put it into a more of a tangible asset.
Yeah, that makes a lot of sense. You know, Willie, when you're thinking about acquiring a property, what attributes are you looking for, right? So obviously people may differ, right? There may be some people watching who are like, I never want to own a 20 unit building. They just don't want to, right? They want to
Right.
own maybe some single family residences or some duplexes or things like that. But for you, how do you evaluate a property? What is the process that you go through where you say, you know what, this is something that I want to add to my portfolio?
Right. For me, so I'm going to give you a really long-winded answer here. Hopefully,
No, that's
it'll make
fine.
sense. But so for me today, when I was first getting into the business, I'll back up. When I first get into the business, I was looking for rent-ready multifamilies. Here in Boston, we do every build up. Everything is a three-family or a triple decker. They're all over the place in New England. And that is my primary investment. I actually do not own any commercial buildings. I don't own anything 5 units or above. Everything I own is a three or a four. And the reason is because it a couple different things. It cash flows nicely. And then two, this may sound awful to some people, but when you're dealing with 5 units and above and you're in the commercial space, you're dealing with very savvy brokers. You're dealing with very savvy sellers, people who are space. When you're dealing with 1 through 4, you're in the residential space still, and you have more emotional buyers, emotional sellers, emotional movement. I got a divorce and my husband moved to California, or the kid, whatever I can give you 1,000 different scenarios, but divorce, death, moving, or just new job, relocation. There are all types of reasons why people say, I don't want to. I don't want to be in this property anymore, and I'm willing to sell it out of a little bit of a discount so I can get out of it quickly. I inherited this property, and I live in California, and my mother who passed lives in Boston. I've never been to Boston. I have no desire to move to Boston or just get it off my hands. So there's a lot more opportunity in the 1 to 4 space. So that's where I really hang my hat and just kind of build my portfolio there. For me, more specifically on the property itself, I'm only today looking for physically distressed properties. Before, I was buying rent-ready stuff and kind of waiting for the market to appreciate, waiting for the debt to get paid down. Today, I'm only looking for stuff that's 50 to 60%, 50 to 60 cents on the dollar. I improve it. I'm looking for stuff that needs new windows, needs heating systems, the roof is leaking, the siding is bad, the cosmetics, the flooring is buckling, whatever it may be. It's just an uninhabitable space. I'm looking to buy it and to give you some hard numbers today, about, let's call it 5 to 600,000. Probably putting 2 to 250 into it, with the expectations that this 3-family is probably worth $1 million at the end of the day, leaving me with roughly $150 to $200,000 in equity after the construction is done. And then I'm looking to hold on to it, pay down the debt, and have it appreciate from there. So to answer your question more specifically, most new investors are looking for get in, it's rent ready, it's ready to go. I'm looking for an initial construction element where I can create some equity, create some value, and then get back to the more traditional buy and hold.
That's really interesting. And obviously, that's something I would assume that developed over time. In other words, like you said, you started looking for properties that were rent ready because it's easier, right? Maybe there's not as much upside or potential, but as you've learned the business, you've met the right people, now you're not, I'm using air quotes here, right, afraid to do the work of the construction,
Right.
rebuilding, renovation, things like that. But that's where the biggest opportunities are, right? And
Right.
it sounds like what's also key here is, and this happens over time, is it sounds like you rely on the network that you've built to identify these properties. You're not sitting there, I assume, looking at Redfin or Zillow for properties to pop up. Like, it's is it safe to say that it's sort of too late at that point? Does that make sense? Like, the real investors have already done their damage, right? And it's already at a premium or it's already at market. The deals come through the network and the relationships. Is that a fair statement?
It is a very fair statement. To be completely honest, and this may just sound discouraging to some new investors, but that's part of paying your dues and being, spending the time in the business. But to be honest with you, if a property hits the market, there's either two situations. Either one, it's a savvy broker who has listed that property and they've already sent it out to all of their investor clients. I'm probably on that list, right? And the investor clients have basically said your seller is too pricey right now. We're just not interested. So the broker then takes it and puts it on MLS, puts it on Redfin, puts it on Zillow, because now they have to get out to the masses and really reach somebody who is less savvy, knows the neighborhood a little bit less, has a little bit less resources, a little bit more desperate to get their first purchase. Or the other option is you have a brand new broker who doesn't have investor clients and doesn't know the investors in the market, has stumbled across this piece of property, and every once in a while you do get lucky and land a truly good deal. And it's most likely somebody, an agent or broker who's listing an aunt's house or something like that, and they just don't know what's going on in the market. Most times, most deals, most real transactions are happening. They're not happening on MLS. They're
That makes
not happening
perfect
on
sense.
Zillow. They're happening behind the scenes. They're happening behind the scenes before the majority of the market ever gets notified, about those opportunities. And it's not difficult to do. I'm not unique or talented in any way. The only thing that I do is I tell everybody that I know, anybody and everyone that'll listen, here's what I'm looking for. I invest within Boston. I only invest within 3 neighborhoods. I only want 3 families, three or 4 families, because twos really just don't work for me. And I'm only looking for, seriously damaged or you know, stress property. When I repeat that
Mm-hmm.
over and over, it starts to stick, and people know exactly what I'm looking for. And I'm the first person that comes to mind when you're in that Boston residential space within a couple different neighborhoods looking for that specific property. I get most of my deals from other investors. They're not even from agents and wholesalers. They're from other investors that say, hey, I have too much going on, or, I invest in Charlestown or Somerville, or I know you're over in Dorchester. This is not my market. Would you like to, take this off my hands? I'll give you, a $10,000 wholesale fee or $20,000 wholesale fee. And then we sign the contract over to me. That's the bulk of my business, and where I'm getting most of my leads from is just networking with other investors and telling anyone and everyone who will listen exactly what I'm looking for.
No, that's great. Willie, so here's something really interesting about what you just said. One of the things that I talk about a lot on this show, and every top agent will say the same thing, is you have to build a brand, right? And that brand has to be something that's authentic, but that brand has to be something that is identifiable, right? You can't be all things to all people. And
Absolutely.
what all of you who are watching right now are hearing from Willie is the exact same thing on the investment side. Willie isn't running around saying, I'm looking for investment properties. Tell me if you've got a deal. Nobody's going to remember you. Willie's saying, I'm looking for these specific things with these criteria in these specific areas. If you hear of anything, let me know. And that's the only way to be remembered, right? And it sounds like, Willie, and let's talk about this for a second. I want your perspective, is this idea of finding a niche, whatever that niche is. And maybe for somebody it's single family properties, maybe it's duplexes, maybe it's 50 unit, whatever it is. Talk about sort of how you found your niche, or maybe even just your best advice for somebody who's looking to get into this game to find out their niche and their specialty.
I mean, you're absolutely right. I think that's the problem with most investors, or most, because I'm a real estate agent, I'm a broker as well. When I first got into the real estate business, I was running 50 miles away from my house, and for depending on where you are, and again, I don't know the Texas market, but 50 miles in Texas, you may still be in a very similar neighborhood or a very similar market. I have
Right.
no idea,
Yeah.
right? 5 minutes away in Boston, you were in a completely different neighborhood. Five
Right.
miles away, you're not even close to where you were. I mean, we have markets here that are street by street, block by block. I mean, it's 3 to 4 streets, and you're a completely different environment.
Mm.
You can be looking at, and it sounds crazy, but $300,000 houses up to $1 million within half a mile of one another.
Wow.
So you definitely have to create your niche, and that's what I didn't understand when I was brand new. A lot of new investors, a lot of new agents are afraid that if they narrow themselves or if they focus themselves, that they're leaving business on the table, that
Yes.
they're going to leave an opportunity on the table. What they don't realize, though, is that when you narrow your focus or you create a niche for yourself, you're becoming that specialist. I look at it as like, if you compare it to another industry, the medical industry, right? I mean, no disrespect to anybody who's a general MD, but it's really the heart surgeon or the brain surgeon or the real
Mm-hmm.
specialists that really make a lot of money. You look at companies like McDonald's. I mean, you can't go into McDonald's, and the reason McDonald's is what it is because you can't get a steak and cheese at McDonald's, right? You
Right.
can't get tacos at McDonald's. That you know exactly what you're going to get when you get in there, and that's how you build a brand. McDonald's didn't come and say, "Well, we don't want to alienate these people because they want tacos or a steak sub, so we have to add that to our menu." They say, no, we don't do that, but what we do is burgers and fries, and we do it really, really well. And that's what you have to to look at your business. Like, you have to look at your business as sort of like a McDonald's, or a brain surgeon or a heart surgeon. And I you know not to be too long-winded, but recently went to the hospital. I'm a do a little bit of CrossFit and basketball and stuff like that. I have a wrist injury and I have a knee injury. And I went to the orthopedics, and I'm seeing two separate doctors for a ligament damage in two separate locations of my body. And that
Wow.
just further kind of hits home the fact that this one guy's a hand specialist and one guy's a lower body and knee and leg specialist. These guys make a lot of money because they know their trade, or they know their specialties inside and out. And that's what you have to do when you bring it back to the real estate or any type of business that you're in.
No, I mean, just to carry that analogy further, which I think it makes sense, is that all of those doctors went to medical school, sort of the same medical school, and then
Right.
they specialized, right? So they got the same foundation, and then to your point, they picked their specialty, and you're rewarded for that. You're paid the most money for that. But just like real estate agents coming from the same general foundation of understanding how transactions work and things like that, that's really the starting point, right? So I think that's a really great analogy. Willie, I can't believe it's been 26 minutes already. I feel like we just started talking, but this is, I think, an amazing kind of intro to this idea. I'd love the opportunity to have you back on and talk more about this. I think it's a really great, fascinating topic, and you know as well as I that a ton of real estate agents are real estate investors as well, and I think you have a lot to teach them. Is there anything that you want to share as parting words of wisdom for any would-be agents out there who want to become real estate investors?
That this business isn't difficult. I mean, real estate is it's something that we're always going to need. And I think I've said this 100 times, but I don't really see a tech solution coming down the pipeline that's going to replace the need for housing or a roof over your head, right? I mean, and it's an industry that I don't think that you need to fear that automation is going to take your job away from you at some point. People need housing, and this business is not difficult. My grandmother, was able to build a really nice life for herself with a sixth grade education. So, I would say, you know, don't overthink it. Don't, overthink some of the terminology and everything else. It really just comes down to income and expenses. You want your income to exceed your expenses, and you want to maximize your income and minimize your expenses. And as long as you're doing that in this business, do really well for yourself.
That's fantastic. Willie, that's great advice. Thanks again for doing this. I mean, you obviously know what you're doing, and I think the message is here of, finding a niche and honestly paying your dues. That's part of this. That's how you build that network and that name. And that's the same thing that hopefully all of you agents are doing anyways for your core business. All of that makes sense. Willie, thanks so much for being on the show today. I appreciate it very much.
I appreciate you having me.
Awesome. We'll talk to you soon. All right. Well, there you have it. I love this topic. I own several properties myself, and one of the things that resonates with me a little bit is when Willie said early on, talking with his wife, was like, hey, she wanted a single family home, and he said, look, I think this path makes more sense. And I can relate to that because I had similar conversations, with my wife about, buying properties, and I understood that having someone else pay your mortgage was a good thing, right? And this turns into a nest egg over time that you can leverage and double down on. And so I think that's a really great message. Again, you heard, right? A slightly different application. Finding your niche, being known for something, right? Willie isn't running around the Boston area saying, hey, send me investment properties, right? He's saying, this is what I do. He's carved that out, and he understands that. And I imagine that has created efficiencies for him downstream when he goes to renovate those properties and understand them and be able to evaluate them, right? He understands how these homes were built, the nuances, the things to look for, all of that stuff comes from a deep level of focus. So I hope you enjoyed today's show. Again, please consider subscribing. Click the little bell to be notified of future episodes. Check out all of Willie's links below. Check him out on social media, his website, his book. All of that's available right there. You can learn a lot from Willie. Until tomorrow, be safe.